Welcome to CryptoBanter.com. I'm Crypto Man Run, coming to you live each and every day at 10 a.m. EST. Yeah, every day at 10 a.m. EST. We chose 10 a.m. EST because we want to bring our crypto news to the whole world. And speaking of that, we are growing very, very fast. And I've got to thank you guys for making all the difference and making us grow so fast. So as we bring this crypto wisdom to the world at 7 a.m. on the West Coast, it's 7 a.m. on the West Coast, 10 a.m. in New York City. It is 3 p.m. in Europe, 5 p.m. in Africa and the rest of the world. And we are coming to you live. Alrighty, and in the headlines today, they've got some big news. We've got Bitcoin taking a dip because of reports around a double spend on the ledger. But was there actually a double spend on the ledger? No. So why is Bitcoin still going down? Well, we're going to take a look at the charts and see if there are any clues in the charts or anywhere to see as why Bitcoin is going down. And then Janet Yellen backtracks, does a full U-turn about her comments around cryptocurrency. She started off by saying they're used for illicit activities, and now she's saying she'll consider the benefits of cryptocurrency and that they may have huge potential to improve the financial system. Of course they can improve the financial system. I mean, look at the current financial system. That's all you need to know. And we're going to look at how poor Wall Street is handling the dips. I mean, this is going to be really funny. I think it's Wall Street's first real crypto dip that's lasted for more than 1 or 2 days. Let's see how they're handling, and I'm going to show you some stuff that I've dug out. And then, of course, in the big story of the day, Raoul Pal is buying alts. So first of all, we're going to help him choose the 10 alts that he should be buying. But actually, more than that, we're going to look at why he's buying alts and why I'm so bullish about the fact that he's buying alts. So we've got a huge show for you today. In fact, I think it's going to be the biggest show that we've ever done, certainly. And I need you guys to help me by doing what my friend Ivan says. And he says,
like, subscribe, bell button, all. 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 Number 1, smash the like as soon as possible. Number 2, smash the subscribe button, the bell button and all, the bell button and all, the bell button and all. It's a very important algorithm, and literally if you do this, Bitcoin will be pumped, Bitcoin will be pumped.
It is a very important algorithm, and if you do it, Bitcoin will be pumped. And actually, that's what we want. We want Bitcoin to be pumped now. And it looks like we have some breaking news. So I'm going to cross over to
breaking news on Crypto Banter, where you break the news.
Yep, Crypto Banter, where you break the news. And it looks like we do have breaking news coming in right now, off the airwaves, hot off the press. And that is, of course, that President Joe Biden has looked at FinCEN's proposed crypto wallet regulation that was proposed by Steve Mnuchin, the outgoing Treasury Secretary. And he says, put a hold on everything that you guys are doing pending review until I get some time to look at what you guys are doing, which is great news. It doesn't mean that we're not going to get the news, but it just means that it's going to be reviewed. And if you remember, that was the rule that all non-custodial wallets also had to be KYC'd before any exchange sent money to it. And a lot of crypto people thought that may slow the ecosystem down a lot. It's been quite a tricky week on the markets. I mean, we've had a lot of FUD on the markets. It's been a FUD-filled week on the markets. Yesterday, we had news of a potential double spend on the Bitcoin ledger. Now, is a double spend big news? Yes, it is big news. It's huge news. And the reason why it's such big news is because if you remember when I spoke about network effects, and I said that Bitcoin, Ethereum, and Polkadot are starting to get the network effects, I also said that there's 3 things that could affect or could destroy a company or protocol with the network effects. The first one was, of course, government intervention. And we didn't have any government intervention this week. We had some comments by Janet Yellen. The second one was if somebody launches a 10x better protocol, and it hasn't been a 10x better protocol at the time. The last one is if the technology fails. And this is a big deal because Bitcoin's ledger is specifically designed to make sure that you don't get double spends. Double spend effectively means that I spend money and you spend the same money. And that's really the difference between Bitcoin and all the big banks, is that big banks can have double spends, but Bitcoin can't have double spends. And that was the real technological breakthrough. So if the news headlines yesterday were true and we could have double spends on the Bitcoin ledger, that would have been potentially devastating news because the technology that is built for Bitcoin, or the purpose that Bitcoin is built for, probably would have been compromised. And that would have been a huge deal. But was there actually a double spend? The answer is a flat no. And I guess the best person to ask about this is Andreas Antonopoulos. So let's see what he says about this potential double spend.
This was normal algorithm behavior, but what does that mean? Some of the headlines you may have seen say a double spend happened on Bitcoin. All right? No, it didn't. A double spend did not happen on Bitcoin. And the reason a double spend did not happen on Bitcoin is because the Bitcoin consensus algorithm, its only purpose, its primary purpose is to coordinate in a decentralized fashion so as to ensure that double spend cannot happen. There is always one singular history on the blockchain, eventually, and that singular history, as time goes by, becomes more and more immutable, and it can only contain one version of the truth. There may be users, nodes, miners, participants who have different versions on their own computer for a short period of time. This is normal. It's part of the decentralized operation of the network. And in those different versions, there may be different versions of a block at a specific height or different versions of a transaction within that block at a specific height. This is a temporary phenomenon and it gets resolved by the time the next block gets mined. So we'll talk a bit about how it.
Yeah, so it looks like there was definitely no double spend on the ledger yesterday. If it had, it would have been a little bit more serious than it was. But the mainstream media picked it up and we started to see the headlines around this compromise. And in fact, we've had quite a FUD-filled week on Bitcoin this whole week. If you remember in the beginning of the week, we spoke about Tether not being fully backed. And to be honest, right now, who cares about that? Most banks aren't really fully backed. And I don't want to comment too much about the Tether FUD, but you're talking about a $25 billion asset in a $1 trillion market. It's 2.5% of the market. And even if it's not fully backed, it probably is 80% backed or 70% backed or maybe even more. And that's not enough to crash the market. Then, of course, we had Janet Yellen who came out with her salty comments. And you'll remember this. You'll remember that she took the market down with her. And it looks like after that, people spoke to her and she did an about turn. So that FUD is completely out the market. And then the last bit of FUD on the market is, of course, so we had Janet Yellen, we had the double spend, and then we had the US dollar FUD. But then we also had some other great things on the market this week. Let's look at what else happened on the market this week. Well, the first thing that happened on the market this week, I want to show you guys right here, is that we had Bitcoin Biden, and Bitcoin Biden was inaugurated. That's amazing, amazing, amazing news for crypto. He's going to be a stimulus guy. He's also potentially appointing a MIT blockchain professor as head of the SEC. So I call him Bitcoin Biden, and I think he's going to be the best American president for Bitcoin ever. Also, we just had breaking news, as you guys just saw, and that breaking news says that that proposed KYC on all non-custodial wallets rule that FinCEN was proposing may also fall away, or at least is getting reviewed. And that's, again, huge news from Joe Biden, or Bitcoin Biden, as I call him. Then you've got BlackRock entering crypto, the world's biggest asset manager entering crypto. There can't be better news than that. You've got Raoul Pal buying alts, and it's not just about Raoul Pal. I'm going to talk to you guys about why I'm so bullish about the fact that Raoul Pal is buying alts. And then Sequoia, who's one of the leading VCs in Silicon Valley, they say that their staff can now earn money in Bitcoin or can get paid in Bitcoin and Ethereum. So if you want to talk about adoption, or if you want to talk about the world's biggest early adopters now adopting crypto, well, that's exactly what it's about. But that's all on the fundamental front. We've also got Grayscale buying crazy amounts of Bitcoin. Let's look at how much they've been buying this week. You've got Grayscale. They bought, in the last 24 hours, they've bought 1,000 Bitcoin. They have slowed down their buying quite a bit. If you remember yesterday, in the last 24 hours, they bought 2,600 Bitcoin. Now they're only buying 1,000 Bitcoin, and they are slowing down. We need to read into that because remember the Grayscale Bitcoin Trust was closed for a long period of time. And they opened it up and there was a backlog. And could this mean that because they've stopped buying so much, that the backlog is emptying out? Got to keep your eyes open for that. And also remember that they haven't started buying Ethereum yet because their Ethereum trust is closed. So we can expect a spike on Ethereum. I'm going to bring in Big Cheds now because I want to talk to him about what's going on the Bitcoin charts. And then I want to talk to him about what's going on in the Ethereum charts. And then, is this a potential decoupling of Bitcoin and Ethereum? I mean, it could be. Let's have a look at that. Cheds, welcome back, my friend.
Hey, man, that was a great introduction. I learned a lot. And thanks for having me, guys. Hit that subscribe, hit that like button. And let's have some fun, man.
Bell button and all. You know, Cheds, you know why you have to hit that bell button? I didn't know this. But the reason why you have to hit that bell button is because that tells you every time we start playing, it sends you an alert. And we want to start bringing a lot of breaking news, breaking charts when things happen. And so, I mean, you need to hit that bell button if you want to be kept updated. And speaking of being kept updated, there's a battle between the Bulls and the Bears, right?
We have a lot going on. And just before we look at the chart, I think what you talked about speaks to the opportunity when you have these FUD events. You know, Yellen's comments, those are already baked in, right? So it dropped the market. If you're a bull, you're looking for these, you know, quote unquote double spend. You're looking for these FUD type events that drop the price as potentially an entry point. So you didn't bring me on here for my FA since I really have zero skills in that area. Let's take a look at the chart, man.
I'll make you into a fundamental guy, and you'll make me into a chart guy because you know I'm actually learning how to chart with you and Coach K. Every time I watch you guys, I pick up something new, and if I'm picking up something new, then I guess our viewers are picking up a lot of new things. So let's get straight into it. Tell me what's going on with this Bitcoin chart. Should I be worried? I mean, I saw the breakdown in that 4-hour triangle yesterday. Tell me more.
Should you be worried? Well, it really depends where you entered. First of all, I'll quickly answer that no. You should not be worried. I'm going to go outside. I'm going to go long direction. We'll go in, and thank you for your kind words about learning. I love learning. Let's look at the weekly chart. You know, anytime you're not sure what's going on, let's zoom out to the weekly chart. We see in the weekly chart, we actually had our first EMA 8, which is an exponential moving average. What that means is it puts more weight into the calculation of the most recent candle, you know, versus a simple moving average like the middle Bollinger at 20, or maybe the MA 200. People have heard of that before. So in the weekly chart, to put this pullback into perspective, we pulled back 30% and we touched that EMA 8. So in any kind of a healthy uptrend, Rand, you're going to see this green line and 8 EMA. On Coinbase, you see like a 12 EMA, 1226. 8 is really often.
What does EMA stand for?
Yeah, EMA is an exponential moving average. Okay, you have two most common. You have the EMA exponential. You have SMA, simple moving average. Take like an MA 10, right? A simple moving average 10. What that means is every one of those 10 data points is equally weighted. Okay, an EMA 10 means the most recent candle has more power, more weight value than the 10 candles ago. And what that does is it makes the moving average more sensitive to price. Okay, that's an EMA versus an SMA. EMA 8 here is this green line in any kind of chart, crypto, probably corn, Tesla, anything, whatever. It's going to be primary uptrend support and a strong uptrend EMA 8. So that's the weekly chart. The weekly chart is still quite bullish. There's no real warning signs. RSI is still quite strong. Nothing freaking me out there. Let's go to the daily chart, and I'll have to come out and say that my primary bull case was wrong. I was wrong right here, right? You have to start with that. I said we're in a strong uptrend. We're in a triangle. It's a bull pennant. Triangles are usually continuation, symmetrical triangles. And I expected a bull break. I was wrong, right? So what can I learn from that? What was a clue? Perhaps this large volume candle here potentially broke it, but I still thought bulls had an edge. And what you see here is these two levels that were targeted. So what I had been talking to people about on Twitter and on Bitcoin Live is this level. If we had a bull break of this triangle, I would have looked for a break of about 40K, that lower high. That's kind of a go signal. And really on the other end of that, the break of 30K, right? That January 11th low, right? That initial higher low after we broke the triangle, and that was kind of neutral in this zone, right? 33 to 30. The break of 30K, that really would have, started to spook me out, but something happened. Buyers jumped in, right? Buyers jumped in. We have the lower Bollinger dip. We have a nice green candle forming. We're back above this key level. So let's just simplify it. Let's just get rid of all that nonsense. Let me just show you what I'm talking about to make your life a little bit easier as soon as I figure out how to use TradingView here. So really, we're looking at this key level right around 30, 31K. So let's just say above and below. Above is bullish, bull momentum. Below is bearish and potential to do real damage because, in my opinion, we have a pocket. We have kind of a gap in volume between that 30K and that 24K area, right? So I know a lot of people were anticipating 26K. In my opinion, really, if we lose this area, we're going to flush down to the next kind of major pocket, which is at 24K. But right now, daily chart, you see bulls jumping in. We can go to maybe like a 1 hour chart and kind of see how this is formulating. We see some type of a pseudo, head and shoulders here, left shoulder, head, right shoulder. Maybe you can draw your neckline, something like this. We got to remember low time frame. These head and shoulders can kind of get, you get a lot of false moves and all that, but bulls have a little bit of momentum here. We have a little bit of a volume spike on this break. So we're seeing a little bit of a room for optimism on this 1 hour chart. That being said, we want to keep an eye on potentially last time the 1 hour chart rallied a little bit. We got rejected here, the upper Bollinger MA50 area. Are we going to see that? I don't know. So there's room for a little bit of cautious optimism. We don't want to get too hung up on these lower time frames. Lower time frames. What I'd really like to do is stay focused on the daily chart and this key level right around 30.31 Rand.
Okay, so we're looking at 30.31. If we break 30.31 on the 1 day close, then you're saying we could be in trouble because then we're going back down to 23.5.
Yeah, it's also a big psychological level. And it's really interesting if you think about this, how we work in crypto, because, leading up to Christmas, we were hoping for that 20K break. And, if I had told you back then or 2 months ago, if I told you we'd be around this price, you'd say this is amazing. But it feels vulnerable, doesn't it? It feels vulnerable to be at 32K, given that we were just at 40K. So you have to think about the psychological, not just the TA, not just the on-chain, all that good stuff, psychological. So 30 is a big level, right? You want to see that 3 handle in front of the price. People who bought the dip. I know some really smart, cautious traders who don't really play these small moves. I saw a text from a friend, boom, I just bought a Bitcoin at 31K. And that's a guy, he thinks, okay, this is a good place to kind of start to get back in. So you're seeing that. You're seeing a lot of really skilled traders who probably played the top better than I did, who maybe kind of got out around like 38K-ish level. And I was saying, hey, you're early. Maybe they were early, but they're right now, right? So that just shows you.
That's always the case. Rather take profits early. I'll take profits early. Chad, in the interest of time, I want to move on to the Ethereum chart because what I noticed yesterday was this was a Bitcoin correction. This was not a crypto correction. If I compare, so let's look at the Ethereum versus Bitcoin. Let's see how that's doing.
Well, let's go weekly chart out and we'll go daily chart in to get some perspective. If we go weekly chart, you really can't really ignore this key level. We see the resistance from that mega push in January. This is after Bitcoin topped off, of course, ran in late 2017. We saw money flow from Bitcoin into Ethereum, which allowed this type of a move, okay? We've kind of come back up and Ethereum has been grinding up with Bitcoin. And what's different now is you have the whole DeFi thing going on. You have a lot more money in the Ethereum ecosystem. So that actually adds a little bit of sustainability, in my humble opinion, to Ethereum, which is why when people ask me, other than Bitcoin, what do you feel comfortable with? I would say Ethereum. So put all that aside, keep that all in mind, put it on the shelf. We're right at kind of a key resistance level. We don't want to ignore that. What we do want to do is step out, recognize we have the on-balance volume confirming an uptrend. We have the RSI resetting and cooling off. We're recognizing that we have some kind of stability and support in the RSI in this zone such that as the price is pulled back, right, we found these dips, and that's corresponded with these moving averages. We have the MA50 here on Ethereum. What am I saying? That was a lot of words. I think you're looking to buy the dip on Ethereum. I don't know that we're going to get down here to MA50. If we do, I'm pulling the trigger. You still want to focus on key horizontal levels as a classical chartist. We want to definitely recognize the value of the support in this high 900 range, right around 1,000. Key psychological level, something to keep in mind as well. I don't know that I'm jumping in right here. I'd probably prefer to wait for a clean breakout and play that. I do not like to enter in what I perceive to be the middle of the channel ran. I'd rather enter at a breakout, use that as my stop loss, or enter at a key support level and use that as my stop loss.
Let's look at BTC versus Ethereum, or Ethereum versus BTC, because my feeling is that Ethereum is getting better against BTC.
Yeah, let's take a look at that. And it's interesting. I actually don't even look at that pair. I just look at the Bitcoin chart, and then I look at the Ethereum chart, and I just visually look to see which one looks stronger, in my opinion. But I'm going to do that pair, and everyone's different. But that's just how I do it. But really on the ETH BTC pair,
look at that. Yeah,
this is just a reference of how it's doing versus Bitcoin. You can see the relative outperformance. If this was just any chart and not ETH BTC, if this was just DOT, if it was anything, if it was the IBM chart, what I would do is I'd recognize kind of a key level of resistance that had initially been established kind of as the price was on the way down and attempting to bounce. And really what you want to do with any chart is identify the key levels at which momentum is going to change, because the chart is a reflection. Yeah.
So we have a Bitcoin dip, but it's not really an altcoin dip. I mean, if I look at DOT hasn't gone down at all. I mean, it's staying put around the $16 or $17 level. It's had an amazing run last week. And again, a lot of my alt bags haven't moved. So to me, this was a Bitcoin correction.
So you say it's not going down, but I would kind of yes and no, because in the moment it was fear, right? When Bitcoin was dropping below 30K, I was actually trying to go long on some of these alts on like a 1 hour time frame, because what we saw was right here, these big lower Bollinger dips. Look at that pullback. It's not going down. It went $18.3 to $15, $14. It went down. So what you see when you have these market-wide pullbacks, when Bitcoin's pulling back, what you want to do is identify the altcoins that had been uptrending, because they have the best chance to resume that uptrend. That's an hourly chart. You're scalping, you're trading, boom. If you go to the daily chart on DOT, I know we talked about this one. You just got a really clear level. Look at that. Resistance. Now support 3 days in a row. You could have bought at 15 and sold at 17. So people are making a lot of money trading a liquid uptrending altcoin like DOT.
Yeah. Let's look at the Bitcoin dominance chart. If you could just call up the Bitcoin dominance chart. I want to see if we can see any patterns in the BTC dominance chart.
Yeah. Let's do it. Okay. My man. So Bitcoin dominance. So this is interesting.
It's going down. It's alt season out there, Cheds. It's alt season, man.
Is it? No, here's the thing. What is alt season? Look, if we go back to 2018, that was alt season because everything ran. In my opinion, it's a selective alt season, because with the regulatory issues around XRP, you have people more afraid, I think, to put money in the more speculative things. Yes, DeFi speculative. Yes, some of these other things are speculative, but the best things are going to run. I don't think XVG is going to run. Okay, I don't think TRX is going to have an alt season. For me, an alt season is everything runs. This is just a crypto season driven by Bitcoin. I actually think Bitcoin will continue up. That's where the institutional investment is. That's where, in my opinion, where the mojo is. So it's a modified alt season, in my humble opinion.
Speaking of institutional investment, I don't know if you remember this interview. Have a look at this.
Of course, we made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
Whoa.
So, we're going to, even if we had the ability to do so today, we're going to monitor the market and see how trading goes on valuation, but ultimately look to buy it.
Scott Miner, we want to delay the Fed press conference for this comment by you. How do you frame a 400,000 Bitcoin? How do you get from where we...
He was talking about, the guy from Guggenheim, and he was talking about a $400,000 Bitcoin. And, everybody thought, wow, the institutions are in. I want to welcome Wall Street to crypto, because yesterday he finally realized what a crypto pullback looks like. And he changed his tune. He said, Scott Minard sees Bitcoin going back to 20,000. I mean, how do you get a guy who's calling Bitcoin to 400,000 and then, Bitcoin's going back to 20,000? Easily,
because he's showing you both sides of his hand. He's in at 10. He's saying, I can't buy at 20. But now that it went to 40, he wants to buy at 20. So it shows he's kind of still not, he doesn't actually fully believe everything he's saying. He mostly does. And that's fine. It's an evolving market. I think what I take away from that is that is a use case argument for dollar cost averaging. If you think it's going to 400,000 and you don't want to buy at 40, buy a little bit, goes to 30, buy a little bit, go to 20, buy a little bit. You're accumulating. You're not trying to flip it. If you're flipping it, you have different criteria. So I just buy a little Bitcoin really every week. I'm very comfortable holding it. I know the dollar's being printed. I know institutions aren't loading it. I know from you kind of the direction we're going. So that's the HODL portfolio. That's the HODL portfolio. Cheds, thank you so much. We love you on the show, man. And on a day like this, when when there's blood on the street, there's no better guy to calm us down and tell us that it's going to be okay. We know the levels we're looking for. So we'll see you again soon, my friend. And then in the other big news today, Raoul Pal said he is looking to buy alts. In fact, he published this tweet. Let's have a look at the tweet that he published. He said, danger,
I'm going to add a basket of 10 alts to my BTC and ETH bets using this tip. Show me your coin, but a quality paragraph why I should look at it. My knowledge base is low, so treat me like I'm an idiot and treat me nicely. So why does this excite me so much? It's not the fact that he's buying alts, because I don't think that his bags are going to move the market, and I don't want to shill him my bags. But the reason why I'm so excited is because he's going through the same cycle that every single person that goes into cryptos goes through. Initially, they get into Bitcoin, and then you become a maximalist. I'm only here for Bitcoin. I'm here because of the returns of Bitcoin, and I believe in the technology, and I don't believe in the shitcoins. And then you discover Ethereum, and you say, hold on a second, exactly what he said. He said, I discovered Ethereum, and the adoption looks exactly the same. Now, if you remember, what he actually means here, he means that Bitcoin and Ethereum now both have the network effect. And my theory is very simple. Whether you're buying a store of value or a supercomputer or a file storage network, you need to look at a few things. And the main thing that you need to be looking for is you need to be looking at whether these things are getting the network effect. And if they are getting the network effect, then you just buy them. It doesn't matter whether it's a store of value, a supercomputing network, or a file storage network. What you're buying is the network effect. So when you buy Facebook, and when you buy Instagram, and when you buy Tesla, and when you buy Uber, and when you buy Google, you don't really care what you're buying. You're buying the network effect. You're buying a business where the more users they get, the more each user adds value to the network. The more users you get, each user adds value to the network, and we get the network effect. And that's, of course, Metcalfe's law. Metcalfe's law says that the value of a network increases exponentially, or by the square of the number of participants. And so when Raoul Pal had the epiphany that he should now be looking at Ethereum as well, what his epiphany actually was look for anything with a network effect. And that's how you decide what you're buying. And so what he said is, look, I've bought Bitcoin, had those returns, bought Ethereum, had those returns. Those returns are now getting boring for me. Tell me about the alts. And specifically, I think what he's asking is, tell me about which alts have the network effect. And so what I did was I created an altcoin evaluation model for Crypto Banter and for you guys. And every time we look at alts, what we're looking for is we want to look at, firstly, we want to look at what sector they're playing in. Are they playing in a sector that's going to be disrupted, in a big sector that's going to be disrupted and disrupted quickly by blockchain? If the answer is yes, you move on to the next thing and you say, well, what is the market cap? How big are these alts? And then most importantly, you ask yourself, what is the current network effect? Or do I believe that this alt is actually going to get the network effect? If the answer to the network effect is no, then you don't do it. But if the answer to the network effect is yes, that's what you want to be buying. The biggest question that you're asking yourself is, will this get the network effect? You don't care if it's in the store of value game, in the payments game, in the file storage game. All of those are multi-trillion-dollar industries. What you want to know is it getting the network effect? Then you look at your level of risk. Well, how risky is it? And then you look at the relative valuation relative to its peers. And I'm going to show you how we do that. And so what I did was I chose 10 altcoins for Raoul Pal. Those are the 10 on the screen. And now I want to show you guys why I chose all of these coins. Now, these are not the only 10. I probably could have picked a couple of others along the way. But this is what I would recommend for Raoul Pal. And this is why I would recommend it. So I'm using this model, as I mentioned to you guys, which is our Bitcoin Banter, our Crypto Banter altcoin evaluation model. And the first altcoin that I'm looking at is Polkadot. Now, you'll remember that I said that in my portfolio, my HODL portfolio, which is my safe portfolio, I have Bitcoin, Ethereum, and Polkadot. And the reason why I have Bitcoin, Ethereum, and Polkadot is because for me, those guys have got the network effect. And if they've got the network effect, it's very hard to stop them. So let's take a look at Polkadot. What sector is it in? It's in the smart contract blockchain space. So we know that that's a very big sector and it is being disrupted by blockchain, and it's being disrupted by blockchain pretty soon. The reason why we know that is because we look at Ethereum, and Ethereum can't keep up with the demand, and Ethereum has a huge market cap, and we'll talk about that in a second. The next question is, does it have the network effects? Yes, it does. There are more projects building on Polkadot than on any other project at the moment. It has the network effect and the money is going to start to flow in. Now let's look at the risk. And again, this is risk relative to other altcoins. And the risk on Polkadot is pretty low because it has the network effect. Let's look at the market cap. The market cap is $16 billion. Now, let's look at a relative valuation. The relative valuation is comparing it to another one of its peers playing in exactly the same industry. And we know that in this case, you've got Ethereum, and Ethereum has a market cap of $120 billion. So if Ethereum has a market cap of $120 billion, DOT has a relatively low risk. It has high growing network effects. It's playing in a very interesting industry. I think that you can buy DOT. And again, I think there's a 10x in DOT. Let's move on to the next recommendation that I have for Raoul Pal. And that, of course, is Chainlink. And the sector in which Chainlink is playing is called oracles. These are the data providers for smart contracts. So if you have a smart contract, the smart contract needs data from external sources. So for example, if you have a derivatives contract, you need a price feed. And for that, you need what's known as an oracle. And that's the game in which Chainlink is playing. Let's look at Chainlink. Does it have network effects? Yes, of course it has network effects. It has a lot of developers working on it. In fact, there's no other oracle play that has such big development. Is it risky? Well, relative to other alts, it's not that risky. It's got a market cap of 9 billion. And unfortunately, there's nothing that we can compare this to because there's no one else in the class that shows how big this sector can be, because Chainlink is effectively the king in the oracle sector. But it's a critical part of the infrastructure of blockchain. And so you have to hold it in your portfolio because you know it's going to work. So let's move on. I recommended 10 alts for Raoul Pal. I've spoken about 1 and 2, and now I'm going to give him a play in the DeFi space. So I was confused. Should I go for Synthetics or should I go for Aave? They're both amazing plays in the DeFi space. Both of them have high network effects, and therefore their risk tolerance or their risk profile relative to other alts is pretty low. Both of them have a market cap of about 2 billion. One has a market cap of about 2.3 billion. And is there a relative valuation? Well, there's no relative valuation. There's nothing else we can compare it to. So for me, he can pick between Aave and Synthetics. Both of them are big DeFi players and allow for synthetic asset minting, which is a huge game. And so for me, pick one of the two and add that to your Polkadot and your Chainlink. And let's move on to number 4. My pick for number 4 in Raoul Pal's portfolio. And as you can see, I'm working down from the less risky to the most risky. So again, for my number 4, Raoul Pal can choose between 2. You can choose between Uniswap and SushiSwap. Both of them play in the decentralized exchange sector. Now, you know that there's a big difference between centralized exchanges and decentralized exchanges. Decentralized exchanges are the exchanges where you don't deposit your money and they don't hold your keys. And therefore, there's less risk of an exchange hack or government seizure or anything like that. So for me, he can pick between either SushiSwap or Uniswap. Uniswap is the safer bet. Both have network effects. Uniswap has higher network effects because it has more usage. Uniswap's risk is low, whereas SushiSwap's risk is pretty moderate. Uniswap has a higher market cap. It's valued at about $1.7 billion, whereas SushiSwap is valued at $900 million. Now, what is the relative valuation here? Well, who can we compare the decentralized exchanges to see if we've got a valuation? And there's really 2 examples here. The first example that you can compare a decentralized exchange to is Coinbase. And Coinbase is listing at a market cap of about $27 billion, if the estimates are correct. And then on the listed ones, on the crypto listed ones, you can compare it to Binance, and the relative valuation is $6 billion. So what you're saying here is that if you believe the thesis that decentralized exchanges are going to rule and centralized exchanges are going to fall away, and I believe that. I mean, already you can see that Uniswap is doing more volume than Coinbase. You can now say, all right, well, which one am I going to invest in? And for me, it's a matter of how risky you want to be. So for me, I would go for SushiSwap because it's a risky option. It's cheaper, but it's much riskier. And it's got less network effects and less adoption. So for me, I would go for that. Let me know what you think about my choices so far. I'm going to go to the comments and just see what you guys think about my comments. There's a lot of 10x coins here. Yes, there are. EGLD, we're going to talk about EGLD for life. We're going to be talking about that. Theta is going to partner with YouTube this year. Yes, they are, and I'm going to announce that on my show. In fact, they contacted me yesterday because they wanted to have some breaking news on the show. So lots going on, but let's get back to Raoul Pal's top 10 coins. I remember he's looking to buy alts. I've told him he should buy Polkadot, Chainlink, Synthetics, or Aave, Uniswap, or SushiSwap. And for my next coin for Raoul Pal, I'm going to recommend the coin that I've made the most money on ever in crypto, or the most returns on, and that, of course, is Celsius. Celsius did over 50x last year, and it's a play in the centralized finance or CeFi space. And it's the biggest play in the CeFi space. What Celsius actually does is it takes deposits in crypto and it loans you money either in US dollars or in crypto. So it's almost like a decentralized bank or a crypto bank. It isn't a completely decentralized protocol, which means that it is driven by a centralized company. And that centralized company is run by a guy called Alex Mashinsky. And he's a genius. This is his 4th unicorn. So you better believe that this guy's going to get it right again. And he is getting it right. In fact, Celsius has a market cap of about $1.7 billion. It's been as high as about $2.5 billion. So you may actually be buying a dip if you can buy it now. And that is my choice for number 5. And what you'll realize is that my number 1, my number 2, my number 3, my number 4, and my number 5 all have amazing adoption. And that's the key here, because remember, we're looking for things with a network effect. And if you want the network effect, you need to look for adoption or potential adoption. And if you've got adoption or potential adoption, well, then that is how you identify whether something is going to get the network effect. And that's what Raoul Paul's looking for. So he's going to love these picks. My next pick for Raoul Paul is another one of my favorite tokens out of Korea, and that's called Luna. It's playing in the payments sector, which is a big sector that's going to be disrupted by blockchain. We know that in the top 10 coins, you've got Litecoin, you've got BCH, and those guys aren't really managing to disrupt payments as well as Luna is managing to disrupt payments. In fact, they've got over 2 million wallet holders in Korea and in Asia. So this is one of the biggest ones. It's got very, very, very high network effects, and therefore I think a very low risk. Now, the key here is that Luna has a very low market cap. It has a market cap of $400 million. Look at the other guys. Celsius has a market cap of 1.7 billion. Uniswap and SushiSwap have over $1 billion. You look at Luna. Luna has a market cap of under $500 million. And that means that there's a long way up from here. And I'd be putting a lot of my chips on this one because I think that it has the network effect. It's just launched Mirror Protocol, which is a synthetic asset protocol. And the main thing is it has adoption. It's cheap. At $400 million, it's cheap. Do your research on this one. And in fact, I'll do a research report on it sometime next week because I think that this is a 10x or 15x gem with very, 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 very low risk. So that is my number 6 pick for Raoul Paul if he does want to get into alts. Let's look at my number 7 pick. And again, one of my favorite tokens. It's called Arweave. It's available on Bilexa and I think 1 or 2 other very small exchanges. So you can't buy it on Coinbase yet, which is a big thing. In fact, you can't buy Celsius on Coinbase. You can't buy Luna on Coinbase. So a lot going on in terms of Coinbase. And remember, none of these have the Grayscale trust yet. So all of these have all that big potential. But anyway, Arweave is a protocol that I've spoken to you guys about a lot. And I want to talk to you guys about why I like this protocol so much. Arweave is a file storage protocol. It competes with AWS, with Google, with all the file storage, or Microsoft Azure and all the file storage protocols out there. The only difference between Arweave and these file storage protocols is that Arweave is fully decentralized. And you'll say to me, okay, well, there are other fully decentralized file storage protocols out there. There's Filecoin, there's Storage, there's Seacoin. All of those do have file storage, but Arweave has one thing above these guys. And that is that Arweave, using very sophisticated game theory, has worked out a way to incentivize miners to store the data for life with one payment, which is a huge thing because if you think about data storage, the internet is replenished or deleted every 20 years. So if you look for articles on the internet from 20 years ago, chances are you're not going to find them. Now with Arweave, once something gets stored, it can never ever be deleted. That is huge. I mean, that I don't know if you can imagine that, but that is huge. Because you've got things like storing internet data or storing blockchain data. And when you look at all of that, you say to yourself, hold on a second, Arweave does have a use case. Now, valuation of Arweave, not listed on Coinbase, not listed on any major exchange. Arweave has a $200 million valuation. If we look at the peer or the valuation against its closest peer, Filecoin today has a $1 billion valuation. So Arweave has about 1/5 of that. And Arweave has much more real life usage. Also on a fully diluted basis, now Arweave is already on a fully diluted basis, whereas Filecoin has a fully diluted valuation of over 30 billion. which effectively means that right now, Arweave is trading at less than 0.5% of Filecoin's implied valuation. So for me, Arweave is a big winner, and it's getting the network effect. It has a moderate network effect. A lot of protocols have started to integrate it. So there's a lot of room here for Arweave to grow. And for me, that would definitely be my number 7. Now, I know when I hit my number 8, I'm going to get a big applause from the comments. Can you guess in the comments what my number 8 is for Raoul Pal? Anyone who can guess, come on, let's do this, and I'll give you guys 1,000 Cardano tokens. What is my number 8 recommendation for Raoul Pal? Let's see the first one. No, it's not ENJ. I see Cloud P saying ENJ. It's not ENJ. Come on, what? The first person to get this right will get 1,000 Cardano tokens. Yep, you got it. Cyprian Tinjala. It's Elrond. So Elrond, for Raoul Pal, I say that he can buy either one of these two as the number 8 token in his portfolio. The first one is Elrond. Now, Elrond is a smart contract blockchain, so it plays in the smart contract blockchain sector. It has a moderate network effect. What I mean by that is that we have a big community for Elrond, but they haven't yet started to develop on the protocol, and that's because the protocol isn't yet ready. And that's why I said that the risk is moderate and the network effect is moderate and not high. It has a market cap of about $650 million, and it's going against Ethereum, which has a market cap of $120 billion, which means that if Elrond can crack this or just get a little of it right, then we know that there's a lot of upside here for Elrond. So for me, Elrond is definitely one of the big ones that I'd be looking at for the number 8 choice. Let's look at the number 8 choice, the second number 8 choice, and that's a token called the Graph, or a protocol called the Graph. The token symbol is GRT. It's playing in the smart contract infrastructure space. Now, what the Graph does is it indexes smart contract data so that if a developer is building a new application or deapplication, decentralized application, he doesn't need to search very hard for data to validate his assumptions and validate his smart contract. He can just go to indexed smart contract data. So almost think about it like a library of smart contract data. So you go to this library and you look for data on a certain subject, and it tells you exactly where you can find it, and you can link it to your app. And for me, the Graph is a big part of the ecosystem for blockchain and blockchain development. And I think it's something that every portfolio should consider depending on their risk profile. Has it got adoption? It's got low adoption because it's relatively new. But because it's the biggest in its space and the smartest in its space, I reckon the risk tolerance here is very low. It's got a market cap of about 600 million. And unfortunately, we can't compare it to anything else. So let's go back to it. We are recommending for Raoul Pal, we're recommending him 10 altcoins. And that's because he came out and said, guys, I'm going full on degen. I want to know what 10 alts to buy. We're going to try and get him on our show. But in the interim, I want to tell him what we think right here at Crypto Banter. I want to hear from you, whether you think that our calls are good. Now I'm going to take you into the 9 and 10 calls. And this is where we go for the 100x valuations. This is where we put small money on projects that have low network effects at present, but that we think have the biggest chance of getting adoption and getting network effects. And for me, like I said to you guys yesterday, if you watched the show yesterday, for me, the most exciting token of 2021 is actually a token in the non-fungible token space. And that token is called Superfarm. Superfarm is a token that has been launched by Elio Trades. You must know Elio Trades. He runs a YouTube channel, and he's a video game developer, and he's also developed the Superfarm protocol for non-fungible tokens. Non-fungible tokens are tokens that work on the same network, but are not exactly the same. So if you think about an Ethereum token, one Ethereum token is equal to another Ethereum token. I send you an Ethereum token, you send me an Ethereum token. It's really the same token. A non-fungible token is a token that is unique. So if you think about a collectible, if you think about a stamp, if you think about a playing card, which is collectible, a collectible card, you can now issue those on the blockchain. And you can send those to one another in the form of what we call a non-fungible token. And Superfarm is effectively a non-fungible token play, which is developed specifically for non-fungible tokens on video games. Elio came on our show yesterday and said that he's building this non-fungible token platform to allow people to create skins or assets that people can use in video games, and that they can share them and send them to one another and maybe even start to trade them. And he's launching a complete one-stop shop solution for NFTs. And whereas, of course, the network effect is low because he hasn't even started. The risk is super, super, super high. I shouldn't have said high here. I should have said that the risk is super, super, super high. But like I said to you before, when you're talking about these 100x alts, what you want to do is you want to put small money on these 100x alts and take lots of bets, because one of them is going to 100x. And I think that for me, this is the one that's going to 100x. I guess only time will tell. For the 9 and 10, I've also chosen real 100x potentials. And that for me is, again, we're talking about 100x potentials. I've looked at 2 plays in the Oracle space. Now, there could have been 100 tokens that I could have chosen for this 9 and 10. This is where you need to do your own research. This is where you need to be smart. The XRT network, the robotics network, is another one that I could have put in here. I could have put in Unimex. I could have put in a whole lot of others here. But I had to narrow it down to 2. And for me, the 2 that I would recommend to Raoul Pal are Bird and OriChain. And there's a reason why I've chosen 2 tokens in the Oracle space. You'll remember that the biggest Oracle play was Chainlink. I've chosen 2 players in the Oracle space because I think we need more Oracle's players. If you think about the decentralized smart contract play, you've got Ethereum, you've got Cardano, you've got Polkadot, you've got Elrond. I think when it comes to Oracles, we don't have another major play. We've got Chainlink, we've got Band Protocol, we've got Band Protocol, we've got API 3, but those are much higher. And I'm going for 100x's at the bottom of my portfolio. And so the 100x for me here is either Bird money, and it's a super, super, super high risk play in the Oracle space. It's got a very low network effect. It's got a market cap of only $5 million. So imagine that if Bird becomes anywhere near the size of Chainlink, and remember that the market is growing, you're talking about 1,000x here. You're talking not even 100x. You're talking about 1,000x to get Bird to a market cap of anywhere near Chainlink, which is what I've called the relative valuation. And so for me, Bird money, if you want to take a high risk play in the altcoin space, and you believe that oracles are going to be the future and we need more oracle plays, Bird is a great one. If you want to go with a slightly risky one, go for OriChain, because OriChain is combining oracle play with an AI play. Now, they're very loose about how the AI play is going to work. But if you can imagine a price feed that actually becomes smarter every single time, or actually becomes smart about where it gets its data from, and not through human intelligence or code, but actually through a computer intelligence, which keeps teaching itself, that sounds like a very interesting proposition. Now, they do have a market cap of about $22 million, which is, again, it's nothing. You're talking about, for them to catch up to Chainlink, there's still a 250x here or something along those lines. The risk is incredibly high here. If you're buying this, you know that you could lose all your money. It could probably go to 0. But if it works, and if it becomes 5% of Chainlink or 10% of Chainlink, then you've got yourselves a winner. And that's effectively why I've chosen the alts that I have chosen. Now, I'm keen to get your views either in the chat. I see that people here are saying that EGLD is much superior to ETH. I don't know if you can say that, because yes, it's faster, but it hasn't got the network effect yet, and it hasn't even got a great interface that you can interface with it at. So I'm not sure that it's the right play. I like it. I definitely buy it, but I don't think it's bigger than ETH yet. I think that's a little bit ambitious. Why didn't I put Coty in here? So the reason why I didn't put Coty in here is I love Coty. I just don't think that it's my best top 10 coin for someone like Raoul Pal who's going into alts. If I was going to suggest the next 10, definitely Coty would be. Let's look at one more. We've got why didn't I put Reserve Protocol in here? Now, there's a big reason why I didn't put Reserve Protocol here. I love Reserve Protocol. The only problem is I don't know what they're building, because when they set out to start the project, they were building a stable coin that is over collateralized initially and then becomes under collateralized as trust builds in the network. And then they pivoted, and they haven't launched their stablecoin mainnet yet, but they started to take money from places like Venezuela through a very sophisticated wallet. And I know that there's amazing backers, and I know that they talk about playing in the DeFi space, but I don't see anything tangible to blow me away. And so RSR would probably be somewhere around my second 10 and not my first 10. Anyway, if you've enjoyed this show and if you think my coin picks for Raoul Pal are great, let's go to, let us know on Twitter, let us know in the comments right here. Hit the like button, hit the subscribe button one more time. You know why? Because That's what's going to share these bags with other crypto enthusiasts. You know, YouTube does gatekeep crypto content, and that's a big thing because we want to get this content out to many people. And without your support, I can't do it. And I see that we are doing exceptionally well on the likes, on the subscribes. But give us one more like and one more subscribe, and I'll see you again. Unless something happens on the weekend, I'll see you again only next week on Monday, same time, same place. Go onto Twitter, retweet my tweets. Let's let Raoul Paul know that we've selected the top 10 coins for him. I'll see you again, same time, same place next week, Monday, 10 a.m. EST. We bring our crypto wisdom to the world. Until then, I'm Crypto Man Run signing out. If you are trading, my friends, be safe out there and trade well. See you on Monday.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.